If you're like most people, you might think an LLC is some kind of special tax-saving machine. I hate to break it to you, it's not. But once you understand how a limited liability company actually works, things get a lot simpler and a lot more useful. So let's de-stress. I'll walk you through how LLC taxes work, why they trip people up, and what actually matters. First, big misconception, an LLC is not a tax type, it's a legal structure. So the IRS doesn't have one set way to tax an LLC. Instead, you get to choose how your LLC is taxed. If you don't choose anything, the IRS applies default rules. If it's just you, your LLC is taxed like a sole proprietorship. If there are multiple owners, you're taxed like a partnership. Either way, your income passes through the business to your personal tax return. So your LLC doesn't pay federal income tax itself. You do. You report the profits on your personal taxes. That's called pass-through taxation. Pretty simple once you see it. But you're also responsible for self-employment taxes. That's about 15.3% for Social Security and Medicare. So, for example, if your LLC makes 50 grand in profit, that income passes through to you and you're paying taxes on it personally, including that self-employment tax. I know taxes can be stressful, but fun fact, taking a walk in nature is proven to reduce stress. In Japan, doctors actually prescribe nature walks, known as Shinrin-yoku, or basically forest bathing. Now this is where things can change. An LLC can choose to be taxed as an S corporation or a C corporation. Here's the difference. With an S corp election, you're still a pass-through entity, but you can split your income between a salary and additional profit. And that can reduce self-employment taxes. But you have to pay yourself a reasonable salary and follow stricter rules. So this usually makes sense once your business is consistently profitable. A C Corp is different. Your business pays taxes, and then you pay taxes again on what you take out. It's double taxation. Not great. It can make sense if you're raising money or planning to scale big, but for most small businesses, it's usually not the move. Here's the deal. These tax treatments don't just happen automatically. If you want to be taxed as an S Corp or a C Corp, you have to file an election with the IRS. Otherwise, you stay in the default setup. Before I let you go, here are a few answers to some commonly asked questions. Do LLCs have their own tax rate? No. Do LLCs file their own tax return? Sometimes partnerships and corporations do. Single-member LLCs usually don't. Do LLCs avoid taxes? Also no. They just give you options in how you are taxed. So LLC taxes don't have to be stressful. Once you understand the options, it's a lot easier to manage. If you're starting a business and want to set things up the right way from the get-go, Northwest Registered Agent can help you form your LLC and get everything in place step by step. Subscribe for more business breakdown videos like this, and if you want to keep going, we got you covered.